On this board, we're talking about your personal credit score. Now, what is your personal credit score? Your personal credit score is a number. It's a number that represents how reliable you are regarding paying back money that you borrow. And basically, the higher your score is, the more benefits you get regarding borrowing money, such as higher amounts, right? Right? Higher amounts. The higher your score is, in general, the more money you're able to borrow. Also, the lower your interest rates are on the money that you borrow, right? But that's not all. There's many other benefits regarding having a high personal credit score, such as lower insurance costs. Did you know that by having a high personal credit score, you can qualify to get lower insurance costs? Also, more options for renting apartments, right? You know that landlords check your credit report when deciding whether or not to rent to you, right? Also, more job opportunities. Did you know that many jobs will check your credit report when analyzing whether or not they want to extend a job offer to you, right? Also, more opportunities to leverage good debt. You know, when you get really sophisticated with investing, it's like having a high personal credit score will give you the opportunities. It really opens up a lot of doors for you to be able to take advantage of leveraging good debt, where you're able to like borrow money at a very low amount, at a very low interest rate, and be able to invest that money into assets that pay a much higher return on investment, right? And you're able to take advantage of those, passive income streams, right? And so it's just amazing, amazing, all the benefits. Now, your personal credit score, it's based on your personal credit report, which is basically your personal financial report card that indicates how reliable you are to pay back debt based on your financial history, right? And there's many different credit scoring models. And one of the most popular credit score models is called FICO. And even under the FICO credit scoring model, there's many different versions of FICO, right? But in general, the FICO score model is based on these things. 35% of your FICO score is based on your payment history. Basically, your history of paying your bills on time, right, accounts for 35% of your FICO credit score, right? 30% is based on your credit utilization, right? Your credit usage, meaning, of your total amount of credit available, how much you're using, like the percentage that you're using of the credit that you have available, right? Both on an individual level, like on each individual line of credit, and based on the total amount of credit that you have available, right? And so it's so important to keep that usage percentage low, right? You want to keep it low. I mean, you want to keep it. I mean, you want to keep it. Some people say under 30%. I would say even under 10%. And really, you really want a high credit score, keep your credit utilization under 3% to really get a super high credit score, right? So 30% is based on your credit utilization. You should never be maxing out credit cards, right? So 30% is that. 15% is based on your credit age, right? So how long you've had credit available to you, right? Credit age. That's why it's important. I'm encouraging all of the young adults that are in my network to start early to open up lines of credit because you want to build that credit age, right? 10% is based on new credit inquiries, right? So here's the thing. Every time you apply for credit, it does, when you're applying for many different lines of credit, right? It can lower your credit score, right? But it only accounts for 10%, right? And it's for the new credit increase. That's why, I say that, look, when you're about to like buy a home or about to, buy a car or whatever, you know what I'm saying? Like don't open up new credit accounts right before you're about to apply for loans, right? Because those new credit inquiries, they do bring down your credit score a little bit, right? But now, as a side note, though, when you're shopping around for a mortgage, right, you have a window of time in which you can apply to different mortgage companies, and all of those credit inquiries will count as one inquiry, right? So there's different nuances to this, but in general, though, be very mindful of credit inquiries. These hard pulls on your credit, right? Be mindful of that. And then the final 10% is based on your credit mix, right? So these credit scoring models, they want to see that you have the ability to handle different types of credits, like installment loans as well as revolving credits, right? So revolving credit is credit cards where you pay it and then you can charge more, right? Installment is more like mortgages and car loans where you pay in installments. You pay off the debt in installments, right? So these five things make up your FICO score. But as you can see, the two things that are the most significant are the payment history and the credit utilization, right? So basically, out of all the things, right? Now you want to be mindful of all five, but really you want to pay close attention to number one, paying your bills on time, and number two, keeping your credit utilization low. All right. Now, monitor your credit, very important. Monitor your credit report and your credit score on a routine basis. That's very important, right? Um, there's different ways. Now, number one is annualcreditreport.com. Annualcreditreport.com is the only website that is officially endorsed by the federal government to give you a free copy of your credit reports, right? Actually, three free copies, right? One from each of the three major credit bureaus: Experian, Equifax, and TransUnion, right? It is the only website that is officially authorized by the federal government to give you a free copy, or I should say free copies of your credit report, right? One from each of the three major credit bureaus. Now, the standard rule is that you can get a free copy, right, from each of the three major credit bureaus from this website once a year, right? That's the standard. But ever since COVID, right, they have changed the rules and they now are allowing you to get free copies of your credit report once a week, right? All right. So you want to monitor your credit reports. Monitor your credit reports. Check out annualcreditreport.com. Now, a little side note: at annualcreditreport.com, it will give you a free copy of your credit reports, but it will not give you a free a free a free indication of your credit scores, right? It won't give you free copies of your credit scores, but it will give you free copies of your credit reports. So that's number one. Number two, credit monitoring services. There are several different types of credit monitoring services. Some are free services and some are paid services. And some companies have a free option as well as a paid option, right? Here's the thing. So several to look into. Several that I recommend would be CreditWise from Capital One. All right, that's a really great. It's free, totally free, and you don't even have to be a Capital One a member to take advantage of it. All right. However, Capital One is a great bank, right? And so CreditWise, looking at CreditWise from Capital One, Also, Experian free credit monitoring. Now, Experian, they offer paid services as well as free services. Take advantage of Experian's free credit monitoring. Also, Credit Karma, right, is a free service, as well as Credit Sesame, right? Now, keep in mind that there are three major personal credit reporting agencies, like I mentioned, right? Experian, Equifax, and TransUnion. And there are many different types of scoring models, and these credit monitoring services, they, there's a variety of scoring models that they may use, right? So keep that in mind, that really a lot of, like, for example, CreditWise and Credit Karma and Credit Sesame, they are using the Vantage score, right? Now, when you apply for a mortgage, right, the lenders are really looking at your FICO score, right? Which is slightly different than your Vantage score. So that's why a lot of times, you might be getting your Vantage score, and then you might go to a lender that checks your FICO score, and the scores are different. But ideally, those scores should be around in the same ballpark. All right. But just want to give you a heads up that your Vantage score is not the same as your FICO score. It's not exactly the same, right? So take advantage of the free credit monitoring services, right? Um, Also, now, why is it important to monitor your personal credit report and your personal credit score? Well, by monitoring it on a routine basis, you can identify ways to improve your credit score, and you can strategize to prepare for future financial moves, right? That's important. Like, for example, by monitoring your credit report and your credit score, you might notice that your credit utilization is high, and so therefore you can strategize ways to keep your credit utilization low, because remember, credit utilization is one of the main factors that really influences your FICO score, as well as your Vantage score, right? So it's amazing. So yeah, that's one of the things. Number two, identify errors by consistently monitoring your credit report and your credit scores. You can identify errors on your credit report. Also, number three, you can quickly identify fraud, right? So it's very important, very important. Now, here's the thing. Responsible use of credit cards, right, is one of the most effective ways to build your credit. Now, if you do not qualify for a regular credit card, then you can start by getting a secured credit card. And after several months of responsible use of a secured credit card, you will be able to qualify for a regular credit card. All right. A secured credit card is one in which you give the bank money in advance, and to secure the line of credit, right? And so if you have to start off by getting a secured credit card, start off by getting a secured credit card. And within a few months, all right, I'd say, like, within a year, right, of responsible use of a secured credit card, you will be able to qualify to get a regular credit card, right? And when you get that regular credit card, and and then you start to use that in a very responsible way, then your credit score will start to really skyrocket, right? Because that's one of the most powerful ways to build your credit, is through the responsible use of credit cards. Okay, so that's that. Now, here's another big thing, big thing. All right, when we talk about generational wealth, I'm very passionate about generational wealth. I'm passionate about not only building wealth for myself, but also helping friends and family build wealth. And one of the strategies is this: consider consider helping friends and family build their personal credit score by adding them as authorized users on one of your credit cards, because that way your credit card account and its payment history will also appear on their credit report, and that will help them piggyback on your good credit history and your good credit score, right? It's a great strategy, right? Now, here's the things though, two things to really keep in mind, all right? Number one, make sure you check the minimum age requirement for authorized users because it varies among credit card companies, all right? Some credit card companies, you can, put on a family member as young as 13 years old, right? Other companies might be more like 16. Also, too, double check to make sure, here's a big thing, big thing. Make sure that you choose a credit card that reports authorized user status to all three of the major credit bureaus, Experian, Equifax, and TransUnion. That's important because the whole purpose of having people be authorized users on your credit card is so that you can help them build their credit, right? But you want to make sure that that the credit card is reporting authorized user status to all three of the major credit bureaus because that's what's going to help those authorized users, right? Also, too, double check that if you're dealing with if the authorized user is a minor, double check because some of these credit card companies they will allow you to have a minor as an authorized user or so like a 16-year-old like a 16-year-old family member or 16-year-old friend, but some of these credit card companies even though they will allow you to add them as a authorized user, some of them will not report onto the credit report of a minor, right? So some of them wait until that person becomes at least 18 years old to start reporting on their credit report. But others, it's different. Other credit card companies will report. So you want to have that conversation, right? Before you go through this whole process of adding on authorized users, make sure you double check the minimum age requirement. Also, make sure that the authorized user status will be reported to all three of the major credit bureaus, right? That's a great way to help friends and family build their credit score, right? It's an awesome way. And by the way, even though you're adding them on as authorized users, you don't necessarily have to give them a card, right? You know what I'm saying? So you can have somebody be an authorized user without giving them a card on your account, right? And it'll still benefit their account, So look into that. It's an amazing way to build generational wealth, right? Because that's so important. It's so important that we increase the level of financial literacy and financial education, especially among the younger generations, right? Because look, we rise by lifting others. It's so true. We rise by lifting others. All right. Thank you for watching. I'll see you next time on the next video.